Right, everyone. Welcome back to another CPI
Another one.
session. Another one. Hey man, I forgot that one, but it's better when you're here in the studio. Ladies and gentlemen, it is definitely another one brought to you by TD Markets and TD Markets Academy. Before we jump in, remember the information in this session is not advice. Yep.
Yes. Please don't construe it, guys, as advice.
Yes, sir. Yes, sir. There we go. We are 6 minutes after 2, right? It's 14:06. And Ash, man, look, we've been waiting for this one. We've been looking at some updates, and now the time is finally here.
Absolutely, brother. It's good to be with you, guys. It's good to be with you guys here as well this afternoon. CPI, two of the most pressed and highly anticipated economic reports for any retail trader in the 21st century, or at least those ones that are trading right now.
Yeah.
So we are very, very happy to have you guys with us as always.
As always. Look, guys, just let us know if the sound is good. On our end, the sound is good, but on your guys' end, just let us know if the sound is good. There are no delays or no volume issues there. All right. And yeah, the US CPI Consumer Price Index, we are coming from a hectic NFP data, right? About 92,000 jobs were lost in the month of February.
Yeah.
And so,
that's correct.
Okay, the sound is good. There, Ash, right? Great stuff. So like as I was saying, we're coming from a hectic February jobs labor report, and now we're looking at the CPI. A lot has been happening since February, right? Of course, we have been talking about the war and all of that. So we want to see, Ash, this print, how the war has affected spending in the US. Yep.
Yes, absolutely. And guys, what's also important about this one is to understand that we have to separate certain features from others. Example, the CPI print has to do with the spending in the US, which is also connected to the interest rates that the Fed needs to cut down.
Yep.
So if the inflation goes up, if there's more spending, they got to delay the cuts, which means that the guys inside of the US, the citizens there, the businesses in there obviously get affected. And then on the other side is the geopolitical tension and the political uncertainty on that side that may not necessarily feed into the US side. Example, gold and silver may be separated in their movement from the Euro USD and the USD JPY as an example.
Yeah.
So we have to separate those two and make sure that the correlation that we're referring to, that we know that it's either it's moving in sync or it's not moving in sync.
And we are gonna see that, right, when the report comes out. And just like the last time, I'm coming live from Joburg. Ash is still in the Middle East giving us the lowdown, the breakdown. But yeah, looking at the chats, the usual suspects are back, Ash. We've got Chantel, we've got Jules, we've got JD, we've got John. Conscious is also in the building. Neta, as always, look, man, thank you for this is a very, very, very good and bright community. Thank you for joining us. All the new guys who just came in, thank you. Please subscribe to the channel. And yeah, this is what we do every NFP and every CPI release.
Exactly.
Yes, sir.
Exactly. So we have our customs and we have our traditions.
Yeah.
Myself and T, we explain a couple of things from the fundamental side. T tackles technicals on the one side there. So we literally have a fantastic chemistry where we put it together. And at the end of the day, guys, not only is the chemistry great, but understand this. We want you guys to filter that through to your trading. Because if there's no chemistry with yourself, if you're trading against yourself, you're going to end up in a lot of trouble. So what T and I do is every stream, we intentionally make sure that we give proper entertainment, one, obviously, because we don't want to be boring. Let's be honest here. Who wants to be boring, right? So entertainment is one side, but quality content is the other. So we balance them together. All right. That's very, very, very important.
100%. And I think on that note, Ash, let's jump straight into it. Give them a breakdown of the CPI and a few talking points there, because a lot has been happening. Yep.
Yes. So guys, thanks, brother. So with regards to Iran right now, guys, there is a lot that goes through the Strait of Hormuz. All right. If the guys don't use that strait, they will then have to come around the Cape of is it Cape of Good Hope? I always get confused with the words. All right, the Good Hope, Cape Good Hope. I always get a kind of a twist there.
Sure.
But they're gonna have to come around South Africa, around Cape Town, southern tip of Africa, if the strait is closed, and that makes things more expensive. Obviously, the shipping, the fuel, all of it skyrockets, and then that affects the businesses, because now the businesses also have to compensate for their losses. They have to pay a higher price in getting, and so they have to push up the markup. That's what increases the inflation. So they're spending more now because of that. All right. So the current situation is, and this is what I said in the opening bell as well, T. I said how can people expect that the supreme leader's son takes over? It's obvious what's going to happen, bro. Our father, son. Of course, the son will be upset that the father was taken out by the US and Israel. So what does the world expect? You know what I'm saying, bro? From that regime to that regime, I mean, the maths make sense that he's going to most likely continue with what was said before. And what has happened was they've actually put mines, or it's alleged, or there's the analysts that are saying that they filled the strait with mines, and it's an attempt to further block. And obviously the US is threatening and said, listen, it's going to get crazier. That's on the one side. So that's the political tension. On the economic side, they obviously need to find balance now with regards to the energy market, the oil in particular, gas in particular. So what the G7 has done is they have taken their reserves. I believe that they're going to start with almost 182 million barrels. They're going to start to give the guys, injected into the oil market to bring stability, so inflation doesn't go up too high. And then obviously they have about in reserves between 300 and 400 million barrels there in reserves to give. Whilst the political side is being taken care of, economically they're trying to set that risk off there. Now, what's very important about this is that per day, the oil consumption of the world is over 100 million barrels per day. So that amount that they have in reserves is not enough to sustain the global market for the next 3 to 6 months. It's not enough.
Sure.
So it's really, and really, I'm saying 3 to 6 months. I'm being a bit more of a long-term look on that one. I'm talking about a month, bro. There's just not enough, right? So there has to be other alternatives, and this is part of why Africa is so important on this or at this table. We don't have the infrastructure, necessarily to sustain what we want, but I believe if Africa was at the table and we had our infrastructure, we could have been a beautiful contributor to the global oil market. I mean, in total, Africa makes roughly between 5 to 7 million barrels per day. And that's not enough, but it's something, right?
Sure.
So taking that and then bringing it to the CPI now, because now guys may ask, okay, so how does it correlate? Well, if the oil price goes up, we're seeing people go to the dollar. So the dollar gains strength, which is what we saw on Monday. The oil price shot up to $114 per barrel, and the US dollar also strengthened, and we saw that in the charts. The oil price right now has gone up again. Me and T was just saying, guys, we just spoke before this, and we said, whoa, the oil price was at $74 a barrel at the start of the week. It's midweek, we're back at 80. So it was 114, then we came down to 74, now we're back around 84. So that's that movement, and I'm going to take your words there, T, and tell the guys, T said it's extremely volatile. That's true. When an asset is volatile, it jumps from one price level quickly to a next one. So it's very volatile. And guys, as a sentiment of caution, be very careful with the lot sizes that you're going to use in a volatile market like today. All right, be very careful with that. You can make a lot of money, but you can also lose. We have to mention that to you guys. Okay, so now there's so the CPI, dollar goes up. That's good for the US. But now please let's connect it to the NFP now. Last month, 92,000 job losses. That means it's not good for the dollar. There's no jobs, there's no pay, there's no spending. But we said this morning that the CPI print can still be strong today. That is if the things like the rent, things like electricity stayed high and consumers paid for that high price. That means the CPI can still come out very strong today. It doesn't mean it's going to be weak. So to now define the CPI in that specific regard, it's a simple way to measure how the prices of everyday goods and services change over time. Hence, I mentioned at the beginning of the week, if we include that high oil price and people paid high energy costs and high electricity, high gas, gasoline, and tea, you actually read something on the gasoline. All right, that means that other things were also, from service perspective, was also high. There's a possibility that just during that period, we could see that CPI print coming out hotter than expected. And maybe just to conclude that quickly, the CPI will track things like food, fuel, rent, electricity, transport, clothing, and economists compare these prices today versus earlier periods, to see if the cost of living is going up or if it's going down. So in simple terms, CPI goes up, guys. All right, prices are rising. All right, there's inflation, but it's still good for the dollar, and vice versa. CPI goes down, the prices are falling, and that's called deflation. It's not so good for the dollar. Yes, well, good for the dollar meaning the value, but deflation is good because it's not going to be a high standard of living, and they can cut those specific interest rates. All these terms, bro. You have to explain it, because if I just say deflation is not good for the dollar, then on the other side, it's not technically correct. Deflation is good if you want to cut rates.
Sure.
So you have to explain it so the guys can understand it.
Yeah, sure. And then remember, it also depends on the Fed's stance. Are they dovish? Are they hawkish? Also depends on that. So that's why, depending on how today's print comes out, and people might anticipate the rates to be kept the same, it might be different, And also, I just want to touch on your point there. So the new leader has already been elected, the son of the late, the Supreme. Do you know that Donald Trump wanted to be part of the process, of the selection process? I found that very funny.
I can imagine it. I wouldn't take it away from him. But again, it feeds into what you and I have been chatting about. It is the fact that the US wants to stay at the top.
Yeah. They just want to control Greenland, Venezuela. Now, after this, we mentioned this the last time, Ash, that they are now going to focus on Cuba. Once this operation is successful, inverted commas, they are now going to want to focus on Cuba. And so it's very interesting, I'm looking at the calendar right now on my end. Or before we even get to the calendar, you spoke also about gasoline, all right? I shared an article with you, and the article says that analysts are anticipating this print to be hotter than expected simply because of the gasoline, right? You broke down what CPI is, a basket of these goods and services that we purchase, the things we need. Now the US, in anticipation of the blockage of the Strait of Hormuz, I don't know how you pronounce it, but Hormuz. So now they're anticipating that there's going to be a blockage. Obviously, the supply of oil is going to be interrupted, so now they would purchase a lot of gasoline because they're anticipating the gasoline prices are going to go up once that strait has been closed, all right? And you mentioned that, hey, look, the US military is willing to assist in escorting these tankers through, through that passage, so that there can be enough supply of oil. So there's a lot of talking points here, Ash, which is just fascinating. And looking at how the charts are pricing everything in, man. Look, this is the time to be a trader. That's all I can say. It's a good time to be a trader. Yep.
Exactly. And guys, what's also critical on what T said there is that, many times we want to buy and sell quickly, but it is refreshing when you know what is happening behind the scenes, because it's the mechanics behind the scenes that gets printed onto the chart. And if you don't understand the mechanics behind what is being printed, it becomes a problem for you as a trader, especially if you're looking to trade into the long term of your life. It's not about what you can just get now out of the markets. It doesn't work like, well, if you're really into the art of trading and you really believe that this is something that you can generate revenue from, short, medium, and long term, it's not about profits here. It's about consistency and understanding how the actual price movement works.
Yes, sir. Consistency, right? On that note, if you look at the calendar there, we've got core CPI, CPI month on month, and yearly CPI. Of course, the Fed are targeting 2% yearly CPI. At the moment, sitting on 2.4% from, I think, 2.7%. So we almost there, we close by, right? The core CPI, markets are forecasting 0.2%, and CPI month on month, markets are focusing 0.3%. And maybe just to jump on how we do things here, Ash, for the benefit of those who are joining us for the first time, all right? So, ladies and gentlemen, we are 7 minutes and counting before the news is released or before the report comes out. For the benefit of those who are joining us for the first time, this is how we do things, right? So listen carefully. We're going to look at a variety of assets. You've got your commodities, you've got your energies, you've got your FX pairs, mostly the US dollar pairs, all right? We can still look at a few outside the cross currencies, but what we do is this. We don't enter before the report comes out, right? I'm looking at some of the questions here. They're asking our direction, all right? So we don't enter before the news comes out. We enter once the report has been released. And all we do is that we apply a few things, but we observe the reaction of that report, how markets are reacting from it on the 15 minutes time frame and also on some lower time frames. And then we're going to base our decision from the initial reaction. So we don't enter before, because I think that there's no issue with that, but it's a bit risky, So we want to limit as much risk as possible. So we enter once the report has come out, and then we observe the reaction. We apply some concepts that we know, and then boom, we're getting our direction, we're getting our trade, right? So if you're joining us for the first time, you will definitely see what you're talking about. But the usual suspects know exactly what you're talking about, right? So I think everyone is ready, Ash.
Yeah, I think so too, man. Do you want to share some of those charts you have there, brother?
Yes, sir. I've got gold in front of me right now, silver, and USD JPY. On gold, I've got 3 levels here, Ash, that we could possibly get something from. All right. The first level is 5174.2. That is on gold, 5174.2. We've got that level there. The other level that I have is 5197.2. 5197.2.
Okay.
And then the other one is 5219.2. It's all the 0.2s, So the last one is 5219.2. All right. So I have these levels so far. I'm not sure if you have anything different from these levels.
No, man, I don't, man. Okay. At this point in time, I'm just looking at that gold price. It just looks like, I don't know, it's like that support is holding there almost. I don't know, bro. Like, at this point in time, I mean, we know that gold is bullish.
Yeah.
But for the short term right now, the print could come out either way. So yeah.
Yeah, no, we'll see how markets are going to react around that. USD JPY there, let me just share a few levels there. I've got the resistance where the market is right now around 158.47. That is USD JPY, 158.47. Another resistance that I have is 158.88. 158.88.
That's if we're going up, right? That's if we're going up, right?
Yeah.
Okay.
Yeah. And
going
then,
down on you. Okay, no. So, that's not USD JPY, correct?
Yeah, that's USD JPY. Now going down.
So going down. Okay, all right. Yeah, I got 157.978 if it breaks that area.
I'll also have 157.52. So mine is 52. Yours is
97. Oh yeah, 157.97.
Yeah, so it's basically around that range. It's basically a range. Basically a range. Okay. So yeah, so we're gonna have a look at how the markets are gonna react around that level. You also mentioned that you're looking at oil.
I am. I'm looking at $88 a barrel, 88.922.
All right, let me just
88.922.
88.922.
Yeah.
Okay. There we go. Anticipating a break above that.
No, I'm saying if it breaks there, then we could push to the upside. Yeah, if it breaks there, yeah.
Got you. All right. Okay, cool. So, ladies and gentlemen, I think this is what we're looking at the moment. I've got my eyes solid on gold. We'll see how that will react. All right. And we'll see how USD will react. Do you have anything on the FX pairs, or we just on these commodities and energies for now?
Euro USD, I also have 1.16373 as a resistance if we do break to the upside. So 1.16373.
373. All right.
Yeah.
Okay, I see.
That's it. Yeah. So we'll see what it does there.
All right. There we go. Okay. So, ladies and gentlemen, I think it's important that I state this, right? You guys saw last week's NFP. The markets eventually went in our direction. So the market just pulled back slightly. It just pulled back, and it happened that it pulled back for like an hour or two. But after that, the market went up. So that is now why risk management is very important. Don't expect the market to move immediately you take a trade, right? It can do that, but the majority of the time we just have to wait. Okay. So looking at what happened, and that's a perfect case study, right? That's a perfect scenario. You always need to apply risk management, right? Obviously, if you go in with all your capital and the market pulls back slightly, it's over. It's done. It's done for your account. So just give the market room to breathe. That's what we do. That's why we are so relaxed, because we are able to calculate our risk. We know risk management. We've got a good risk management system. So hence you guys see we are always calm. Even if the market pulls back a little bit, we are always calm. All right. So just remember that we are 1 minute and 50 seconds away. Let me just look at the questions there, Ash. Let's have a look at the question. Thank you so much. Thank you. The sound is good. Okay, great one. Okay. Good afternoon, Tanya. Good afternoon. Bravo says, it's no longer about trading support and resistance anymore. It's about real-time market insight. Definitely. Trading communities often share news, trade ideas, and analysis that help you stay up to date. Definitely. Ash, on that point, you spoke about something, I think it was yesterday's trading room, where for us, it's all about beyond the objects we see on the charts, right? It's all about understanding the depth of what's happening around the world so that you can interpret and translate that to the charts and be able to identify what the chart is doing. So it's all about beyond the charts.
Yep, it's exact. Oh man, that said it. I think you said it. I don't need to add anything to that. That says exactly perfectly.
All right.
Yeah,
on that note,
it's beyond.
We are 50 seconds away. All right, guys. What are you guys expecting just before the report is out? Are you guys anticipating a stronger dollar, a weaker dollar? Talk to us. Talk to us. What do you guys think?
Oh, it's gonna be interesting, man.
Let's
go. Be interesting.
36 seconds and counting. Let's go.
36, 31. Okay, got you. Hey, it's gonna be interesting, man. Let's watch it now.
Listen,
I have it on the Euro USD in the meantime.
Yeah.
To see. Obviously, you'll check out the gold or whatever. I got the Euro USD on in front of me to see. All right, so 16. There we go. 15. Same time, right? 13, 12.
Yeah. 11, 10. Let's go.
5, 4, 3.
Yeah,
2, 1. All right, there we go.
Boom. There we go.
Right,
okay. How are we looking?
Okay, I'm seeing no reaction yet on the Euro USD. I don't know about gold. I didn't look yet.
Yeah, gold is muted reaction at the moment, right? In fact, everywhere its reaction is muted. Just waiting for the calendar to update.
Okay. Core CPI is the same.
0.2, yeah.
Okay. All right. I'm not seeing any.
Yeah, the reaction is
Yeah.
muted. CPI month on
It's
month,
muted.
0.3%.
Brother.
There's nothing. Yes,
No, 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 no,
yearly
no, no,
CPI
no.
2.4%.
No. These guys. Yeah. Who did the calculations?
Hey, look.
Who did the calculations?
So this is not drastic figures, guys. Look at that. It's not drastic figures. So usually such figures will cause muted reaction. Look at what gold is doing. Look at what USD JPY is doing. My goodness, silver. All right. So the question is, who did these calculations? That's a very good question there, Ash.
Who did these calculations? Because we had 20% of the world's global oil and natural gas stopped.
Yeah.
Price jumped from $90 a barrel to 99 to 114, came down to 70, went back to 80. How can it be a muted response? It doesn't. It
doesn't make sense.
It was too drastic, bro. I mean, even silver, if you look at it, right? Monday, we went up from 81 to 89.
Yeah.
That's a lot, bro. That's a lot.
That is a lot.
That's a lot. Gold, we went up from on Monday. We went up from 5019 at a support, right?
Yeah.
To 5237. That's massive, bro.
That is.
That's a massive move. So
indeed,
for it not to do, who did the calculations?
So now the question that we have here now, right? Because we had the NFP, we have the CPI, there is the PCE coming up later on Friday this week. Now the next question is, with this prints, with a weak CPI, with an even weak NFP, the interest rates that are coming out now, I wonder how they're gonna approach, how the meeting's gonna go, you know, and also are these the figures that the US, that the Fed are really looking at, are really looking for? So that's the question right now. But the response that we're seeing right now, gold is not moving, literally not moving. USD JPY not moving. So we're in a bit of a situation where either we need to wait or there won't be any trades today, Ash, or maybe they're going to come after, like at 6 p.m., you know?
Exactly. So in this specific case, what I'm seeing here, because we haven't moved, it just means that inflation is stabilizing. That's it.
Okay. That's a point today.
Yeah, it's just stabilizing rather than accelerating or collapsing, really. And so this also matters. I think you said it best here now. You said that we're very close to the Federal Reserve and them either cutting or holding rates, you know. So it just shows that it's stabilizing. That's it. You know, nothing more, nothing less. But to me personally, you know already, bro, for me, it is more of what's really happening behind the scenes, because it doesn't add up.
What's
you
happening
see what I'm saying?
behind the scenes?
Exactly. Even although one will look at what is happening with the percentages, and like, yes, we can justify it stabilizing through the calculations, but then why is the western side of the world in the central side of the world trying to get at the eastern side of the world, at China? You see what I'm saying, bro? So in as much as we can justify the figures, we can cook the figures.
Yeah.
But it doesn't take away that there's still an agenda behind that. And that is the thing that is really the mechanics behind what we are seeing here. I mean, right now, at this point in time, if we look at the Euro USD itself, right, it's only correcting now after a high that it actually got yesterday. It's correcting from that high right now.
Yeah.
We can push back up again, which is part of structure at this point in time. It can push up at 4:30 today.
Yep.
It can.
Yeah.
So there'll be a lot of sellers right now, a lot of sellers, and they're gonna put the stop losses where? At that high of yesterday. So they just go to grab liquidity, basically at the bottom from that specific area over there. They push back up and they take out all those stops. I mean, how many sell stops are being triggered right now from this morning? So many sell stops, bro. And where do they put their stop losses? Above the 1.16373, which I gave you there. You see, so then all of that gets wiped out. So at this point in time, because there's no CPI print available to say there's any change, I think the guys should be even more cautious now about when they enter. It would have to be at the New York session. Let them watch what happens there.
Hence I said, look, there could be movement. There could be a solid movement later on in the day. It could be during the New York Open session. This is not the usual reaction we get for, within the CPI. This is what you would expect with the NFP. But CPI,
CPI, exactly. And from a CPI perspective, it's actually a little bit more constant than the NFP if you think about it, because spending is happening a lot every single day. So the amount of data that gets taken into consideration versus the employees that get onboarded, there are some differences there. You see what I'm saying, bro? So it's very interesting that there's a muted response. But I mean, again, we're going to have to wait and see even for next month, because I think what has happened now as well is pricing in to say, listen, next month CPI, we're probably going to see a bit of what's happened at the beginning of this month now in there.
Yeah, sure, definitely. So next month will be a report, definitely released in April.
Yeah, exactly.
All right. So I think going through a bit of an analysis on USD, or rather gold, the guys know I'm still bullish on gold myself, right? But short term, let me just do this. I still, looking at the structure what's happening here, I still see price going up one more time. I still see a higher low forming somewhere around this area. And I'm looking at particularly this structure here. So you have the higher low that previously formed, the market went up to the correction. So I'm still anticipating a higher low to form. So I think on my end, Ash, I'm not going to go with a sell as yet, right? I'm keeping an eye out for a buy because I'm anticipating that one more push towards the upside.
Yes. I'm also on the Euro USD anticipating a buy still. I know that the dollar seems to be strengthening right now, but I'm seeing that as a pullback on the 1 hour.
Sure.
And I'm going to wait for the New York Open there to see what's happening.
100%. So this is how I'm looking at gold, guys. All right. Obviously, this CPI, you can see what price is doing. We can still see a bit of reaction from that, but I'm looking for one more push towards the upside. So what I can see short term is we could break that 5174.2. The market could break that 5174.2, but only to give us a higher low of like a 4-hour structure before we continue doing this. So that is what I'm keeping a very close eye on. And should this possibility, with this possibility, then we're looking at price headed back to these highs, possibly breaking those highs and continue further. We could also get a break above 5197.2, right? If price does not do this, we could get a break above that and we continue pushing up. So this is what I'm waiting for, right? So I'm gonna stay away from any sells on my end, just looking for the buys.
Also, maybe just for the guys I see there's a comment there from Bravo on Bitcoin. BTC. Okay, so just something interesting there on BTC.
Sure.
When it comes to the CPI. Okay, so CPI, as we know, it obviously tells the markets what the Federal Reserve may do next. I think that we've now mentioned, right?
Yeah.
But what's important, maybe just looking forward, because we know the Federal Reserve wants to cut the rates. Okay. What if you're into the crypto, guys? All right, which is we obviously offer crypto on TDME, our fully regulated crypto exchange, guys, where you trade derivatives with us. If you're into the cryptos, our marketing department will be putting in those links for you. You can register, sign up, get in touch with our ZAR coin that we also have from Stellar. And we can then obviously get you to understand how important it's going to be for the interest rates. Now, when the interest rates get cut, all right, this is going to be very important. It's going to be very, very, very good for many of the guys that love the crypto. All right, so lower rates means more money is going to enter the market. All right, because so with more money entering the market, guys want to diversify crypto rises in that specific context. If the rates go up, there's less money that would be into the market. It becomes a bit more expensive, so crypto goes down. So if there's no change in inflation, and inflation is stabilizing and it comes down, it means that you must be watching out for crypto very soon, because Bitcoin has already gone down to a beautiful low. And if you get into that kind of a low on crypto now, when that rise comes, you'll be making some good money there for sure. Yep.
I mean, we're waiting for that rise. We've been waiting for that rise. And
we've been waiting,
for the past, 4 weeks, Bitcoin has just been trapped in this zone for the past 4 weeks. So the question is this the low we've been talking about before the rise, before the bullish run? We don't know. We just have to wait and see, right? But this is also looking at the Fed, the upcoming FOMC, and also the regulatory news or the regulation news in the US, also keeping up to date with that. All right. And that's gonna give you more insight. Yep.
Exactly. No, brother. I think I'm pretty satisfied with where we are right now.
Yeah.
But I do think the New York session is gonna give some valuable insight there.
Yeah, the New York session. Okay, so you guys can see, I think this is a poorer CPI. Nothing much is happening on this one. Gold, we're just waiting for that reaction. USD JPY, I mean, we can see nothing much is happening. I mean, the move can still happen later on, so we just need to be prepared. All right, you are also looking at Euro USD on your side there, Ash. Yeah.
Yes. Also, maybe we can give the guys US 30 here. All right. I'm looking at US 30 as well.
Oh, there's something there.
It looks like there's something here, man. At the US 30, above 48345. 48345.13.
4834.
48345.
Point
13.
Okay.
So if we get a break above there, we could go to 49326. 49326.77.
Got you. 326. All right. Run around this area here. Run around 326. Okay.
So above 48, right? 48345.13, right? Then we could go to the 49326. That range over there. Exactly there.
Around that range. Okay.
Exactly. That's a beautiful trade there.
No, definitely with you 100%.
That's a beautiful trade. I was also looking at the Hang Seng, but the Hang Seng is a little bit it's a bit volatile right now, so let me reserve that one.
The Hang Seng. Okay. So we spoke about US 30, spoke about Bitcoin, US oil also spoke about it. Nothing has happened on US oil as yet, right? But we'll see during the course of the day. During the course of the week. Gold, we can see nothing is happening. I'm not sure if there are people that maybe got in on any of these. Maybe do let us know in the chat there, right? Euro USD, we are waiting for that as well. Nothing much has happened. No, Ash, I honestly think that these are the movements that are going to happen later. That's it.
At this point in time. And guys, please don't be fooled by what you see on the US 30 now or the S&P 500. It looks like it's going down, but it can stop mid-air and then just go the other way. So just be very careful of what you see. Those types of candles you see there, it's so nice and red right now. And that thing, it lures people in, bro.
Definitely, no,
those they so fat and they so red and they look nice, and when you go to the lower time frames they look so long, but if you get in there and then you think, listen, we're going down here, when New York opens you could get yourself in a rude awakening. All right.
I've got some update there on the US inflation. It says the annual inflation rate in the US held steady at 2.4%. That's exactly what we saw, unchanged from January, in line with expectation. and remaining at its lowest levels since March or May 2025. Right, lowest levels
Trump's
since May
getting
2025.
Trump is getting exactly what he wants.
You think so?
Yeah, he is. He wants lower rates. He's getting exactly what he wants. I'm not going to say what he said.
Yeah.
In one of his updates, he said, I'm not going to use the word he used there but he said, there's no other president can do the stuff that he's doing right now. There's no other president in the world that can do it.
Yeah, I mean, he's
he's on a different path, man.
Yeah, he is.
He's on a different path. He hasn't taken the easy road. He's mocked. He's ridiculed. He's ostracized. He's praised. I think it's coming from both sides. But he's taken the road that's less easy to actually travel on, which is very difficult. Very, very difficult to travel on that road, bro. And then you have to have such thick skin for that, because you're gonna get a lot of people that's going to say crucify him, but on the same time, in the same breath, he's going to say, I want to go to heaven. You see what I'm saying, bro? So very interesting.
Energy prices rebounded. Energy prices rebounded, led by a smaller decline in gasoline. We spoke about gasoline and a rise in fuel oil. Right, that's what we expected, and natural gas.
Yes.
On the other hand, prices for used cars and trucks declined more, while inflation steadied for food and shelter. On a monthly basis, the CPI rose by 0.3%. We saw that slightly accelerating from 0.2% in Jan, and in line with forecasts. Shelter prices were up 0.2% and made the largest contribution. Gasoline went up 0.8%. We spoke about gasoline prices possibly going up. They went up by 0.8%, and food rose 0.4%. Meanwhile, annual core inflation, which excludes food and energy, remained unchanged at 2.5%. Yeah, definitely. That's what,
Okay.
All right.
Okay, gotcha.
We are seeing a bit of reaction coming through.
Which is it looks very bearish right now. Looks like the dollar strengthening. With the dollar strengthening, we're seeing USD come down, S&P coming down, UK 100s coming down. The indexes are coming down because the dollar seems to be strengthening now. So with the guys pushing into the dollar, obviously taking money out of other places, and that's causing a bit of a push to the downside, right? But as far as the gold price is concerned, it's still in that range, though.
Still in that range. It hasn't moved much. I think it's gonna create a low, and from that low, there's a lot of rejection that's happening there. So from that low, I'm anticipating price to go up. This is my direction on gold, right? It can still go a little bit lower, but I'm still watching out for those buys.
Yes.
Yeah.
Okay.
All right.
I think it's self-explanatory here for now.
It is, bro. It is.
Yeah, it's pretty self-explanatory for now.
It is. So, ladies and gentlemen, 76 watching us live. Thank you for joining us. Please subscribe to the channel. We do this every CPI and every NFP release. I mean, this is before your eyes. You guys can see what's happening, right? It is not the usual CPI or that we are accustomed to. It's not the usual one. Otherwise, we would be in trades now. This one, it is a situation where we need to just wait for the market to confirm our setups, right? But this is the setup that I have for gold. So so this is a very, very, very different one. It's the first time we get this kind of CPI, Ash.
Yeah, exactly. I mean, at the end of the day, guys, look, let's wait for the New York Open and let's see what transpires from there. But if nothing happens today, then obviously it's only midweek. We still have 2 days left for the trading week. And we'll see what the dollar does then.
Yeah, I mean, it's only midweek. So something can happen tomorrow. All right.
Exactly.
Something can happen tomorrow. Let me just look at the chat. All right. And maybe give us your views, guys. Are you disappointed by this data, this reaction? What was your view? What were you anticipating? Maybe just a short brief, your take on today's CPI, right? Would love to know what your thoughts are, of course, right? Just maybe on the chat, just pop it on the chat there. Let's have a discussion while maybe we see what the next maybe few minutes are going to give us. Yeah.
Yeah, exactly.
All right, let's see. Data was good. Okay. John says the data was good. All right. Okay.
Yeah, I would have liked to see some more action.
Yeah, same.
I was actually kind of hungry. I was really looking forward to this one. I was.
So now you see, obviously, the conflict took effect when? Is it late last month into this month? Yeah. So now people will be watching the March NFP figures and the March CPI figures, which are going to be released next month. NFP is going to be on a Good Friday, guys. So I don't think we're going to go live. That's on a Good Friday. We're not going to go live on that one, right? Yeah, it's on a Good Friday look. So economists, investors will be watching out for the CPI and the NFP report for the month of March to see what's going to happen, right? If it remains the same, then there could be a problem with the next FOMC meeting.
Exactly.
Could be a problem.
Exactly. But I think maybe to conclude on this one, bro. I mean, I think it was the gasoline. That was really high. And then obviously we have the electricity and so forth. But for the most part, many of the stuff stayed the same, like we read. Yeah.
They stay the same. All right. So looking at the chat there, no, I was really expecting this. Okay. Bravo was expecting this. Trump regime is something else. Yeah, it is something else. Daniel, to be honest, this is what I want because I trade structure, so I was worried if news might ruin structure.
Okay, got you. Nice.
I think that's an important point on structure there.
Same here.
All right,
I agree with it so much.
Yeah, we trade structures well. We focus structure is the foundation before we even put the bricks and all of that. Structure is the foundation. So I would agree with you there, Daniel, when you said you were worried if it's going to change the structure. We're not seeing any changes at the moment, which I think is a good thing, So we're going to trade hands on gold. I'm looking for buys because the structure that I see on gold is bullish. Imagine if CPI had changed the structure, it was going to be a mess. Look at what's happening. Look at this massive rejection on gold right now. Yeah, there's liquidity sitting down here. So definitely it's grabbing that, wiping out the stop losses. So I'm anticipating price to push up. So that's a very valid point, and in fact, an educational point in that, right?
Yes.
The question is, does the news break structure or does it not break? So that's a very important, valid point there.
Yeah. I actually agree with you on that, and I agree with Daniel. At the end of the day, structure returns to structure after the drama. And at this point, even though there's no CPI change, it's still drama. There's still drama.
Drama.
You see, and that drama is looks to be strengthening within the dollar's favor, but you can't say that it's gonna last the entire day. It can change.
No. Yeah.
That's the drama right now, that the dollar is actually strengthening here. Because if you think about it, if we just had a percentage lower in one of those prints there, we could have gotten a stronger dollar here.
Yeah. Just a percentage lower. Yeah.
Just a few figures lower, and it changes from better than expected or muted or neutral to worse than expected.
Yeah.
We could have had a totally different CPI here. So so let's see, man. New York, let's have a look.
Yep. Let's see New York. All right. So that is how things are looking, guys. I would say, not what you anticipated, but it's okay. Let's trade the structure. We always trade. And there are going to be trading opportunities definitely the remainder of this week. It's only Wednesday. So Thursday, Friday, there will definitely be trading opportunities, right? I don't know, Ash, on my side, everything is there. The guys can see. We just need to wait and see how the day, how the day goes. Yeah.
Exactly. Okay, guys. Well, enjoy it, guys. Look for the New York structure.
Yeah.
New York Open. and then look to see how the major pairs move. Let's see how these major commodities move, and then check out that Bitcoin as well. It's going to be interesting to see what happens when those interest rate cuts come.
Yes, sir. Yes, sir. And definitely watch out for the next streams we have in store for you guys. Follow us on all social media platforms. Watch out for tomorrow's opening bell, tomorrow's trading room, the weekly trading room. Maybe we could get something different on the trading room tomorrow at 2 p.m. Watch out for that. Friday's Crypto Decrypted. We're hoping that you guys enjoyed yourself. We enjoyed ourselves. We were hoping for a much better, stronger CPI. However, it is what it is. All right. So yeah,
what it is.
From our side, that's it for the US CPI. The figures are, like they say in today's English, the figures are figuring, eh? Yeah, the data's dating. You know, man, these terms. Guys, have a good one. That's it from us, a solid one. Thank you for joining us. We'll catch you guys on the flip side. Cheers.
Cheers, guys. Cheers. Yo, just 1 second, my man.